Hey everyone.
Well, hey everyone. No, we just all got done eating, so we're trying to not fall asleep. So we're gonna have a great panel. My name is Gabo Congo. I'm here to present our panel on accelerating real-world adoption for stablecoin, and I have great panelists with me. I'm gonna present to you all of them. So we have Pascal Talarida from Jarvis. Did I say that right? All right, perfect. We got Ivan Hong from Request Finance. We have Jan Girardi from Montpellier. And we have Marek Olszewski from C-Labs.
Hey everyone.
All right, so I'm gonna let you guys a little bit present yourself to the crowd, and then we're gonna jump more on how stablecoins really are, like real world adoption, and mostly like why we need them, because that's actually a real good question. So please start.
Sure, maybe I'll go first. It's really great to be here. So my name is Marek Olszewski. I'm one of the co-founders of Celo. If you are new to Celo, Celo is a proof-of-stake EVM-compatible L1, and perhaps soon to be an L2. Just today, we at C-Labs put up a proposal to turn Celo into an L2. So we'll see how the community votes on that. But Celo's origin story starts 5 years ago when we tried to build a really easy-to-use mobile payments wallet on top of Ethereum. And we couldn't get the experience that we wanted. We couldn't make a wallet that was easy enough for billions of people to use. And so that took us down the path of launching our own EVM-compatible layer 1 that had some features that would enable you to build really easy-to-use applications specifically focused on payments and stablecoins. And so the first of these features is the ability to pay for gas with tokens. So on Celo, you can pay for gas with any ERC20 token that's been approved through on-chain governance. Right now, there's 3 stablecoins that are approved. Celo also has the ability to send payments to phone numbers, which is really easy, which makes it really easy to send value, and is a really great use case for stablecoins. It also has a ZK Snark-based like client that lets you use it on mobile devices. So yeah, that's Celo and that's me. Thank you.
Hi everyone, my name is Ivan. I am the content lead at Request Finance. Request Finance is probably the world's largest crypto payroll, expenses, and invoicing app today. We launched in January of 2021. One of our first clients was MakerDAO, and today as of last month, we've crossed over $350 million in crypto payments, of which about 60% is in stable coins. Actually, 3% is in CUSD. Request Finance is chain agnostic, and we're also token agnostic. We simplify and automate a lot of the payment processes to make it easy for enterprises to use crypto payments for things like payroll, expenses, invoicing. I think one of the things that motivated Request Finance was actually having to make crypto payments ourselves at an enterprise level. And if you think about most of the payments that you make in a given month or in a given year, peer-to-peer is honestly like maybe 1%, 5% if I'm being generous, right? So if we are looking to gain mass adoption, it's wild that you can't do all those things that you normally are used to doing in Web2 or TradFi in crypto, right? And so we design an app that feels like a banking app, like a Web2 app, but it runs on crypto payment rails.
Hello everyone, my name is Pascal from Jarvis. At Jarvis, we focus on building non-USD stablecoins like Euro, Swiss franc. But we have an approach which is a bit different. We don't try to be the biggest or to have a high TVL. We try to focus a lot on usage. So we focused a lot actually with Request and Montpellier for the on and off ramp, for payment, for companies, and so to help companies to hold their euro on-chain instead of in a bank account. And so, yeah, the specificity of our protocol is that you can borrow our stablecoin from the protocol, but you can also buy the stablecoin from the protocol without any slippage. So this allows you to have high liquidity, and this is the main feature of our protocol.
Hello everyone, my name is Jan. I'm from Montpellier. We are a regulated Swiss company doing on and off-ramp services, and we've been here since 2017. And from the start, we are big advocates of self-custody, and our starting point was that we should have easier ways to get in and out of crypto in self-custody, directly using your own wallet in alternatives to centralized exchanges. So our mission is really to make this entire process of getting in and out of crypto as easy as possible, as cheap as possible, and as smooth as possible.
All right, thank you very much. So, let's dive in. Can you take us back to the early days of stablecoin? Like, what were the initial challenge that you guys faced? Because, 5-6 years ago, stablecoins didn't mean anything to anyone. And, now we're here, and how do you think this will shape our future?
Sure. I think if you go back, back to the early days, back to when kind of Maker first launched, I think, thinking back then, oracles were a big challenge, right? Certainly a lot of the protocols were still early in terms of their designs. And so I think there was a lot of experimentation, and, I think we've seen the results of all of that experimentation over the last few years. But the thing that I personally missed the most back then, and this was the reason that we worked so hard on this feature, was just the fact that if you sent a stablecoin to an address that didn't have ETH on it, you couldn't then send it on to anyone else. I don't know, maybe show of hands, who here has sent a stablecoin to an address and then realized that it's stuck and they couldn't do anything with it?
I think we all did this, at least once.
Right.
When you navigate that space, you make mistakes to understand, though.
It's the most frustrating experience ever, and it's frustrating for us. Imagine how frustrating it is for kind of the next billion people that we're trying to onboard. And so that's really why we invested heavily in this native support for paying for gas with tokens, and it's quite magical. I think when you send. So on Celo, there's a number of different stablecoins. Mento, the Mento protocol is probably the most well-known one. I think there was someone from Mento, Nadim, on the stage here in the morning talking about that protocol. It's a really interesting design. But their goal is to launch a stablecoin for every currency in the world. And their goal is to have each of those currencies, each of those stablecoins be gas currencies on Celo. And so, in the future, you'll be able to send any stablecoin for any currency and pay for gas with that stablecoin, which not only is just really amazing for ease of use, it actually unlocks a really cool experience where, we were talking a lot about cash in, cash out. Imagine if you can cash in directly into a stablecoin, perhaps a stablecoin that matches the currency that you use at home, and then be able to actually go buy NFTs, go participate in Web3 without having to then do anything else, and do it in a fully self-custodial way. And so that's something that I think we still don't have yet, but I'm excited for the future because I think it's coming.
Sure.
So I think I'd like to go back a little bit more beyond just the origins of stablecoins, because I think that money has a long history of evolving. And I think stablecoins are just the evolution of digital payments, right? It sounds unsexy, it sounds not so revolutionary, but it is. We used to have commodity as cash, right? And then we deposited those with banks that gave us bank notes that were depository receipts, effectively. And then now we deposit those things in ATMs and we have digital cash, right? So is it a step too far to think that we will deposit them with stablecoin issuers and get stablecoins instead? So yeah, I'm quite excited to see a lot of the improvements in the user experience, especially because I think there's a lot of things that can be done at the infrastructure layer, like gasless transactions, account abstraction. But I think there's a lot to be done in terms of the user experience for enterprises. There's a lot to be done for, think about it. If you make it difficult for enterprises, if it's difficult already for us to use stablecoins to make payments as retail users, the CFO of a large company is going to look at that and be like, can I push that data to Oracle NetSuite for accounting? No, sorry, I'm not going to use it, right? And then you don't get adoption. So I'm quite excited to see a lot of the new tooling that's coming up around making stablecoin payments usable for enterprise use cases as well.
So for you as economists, because you are an economist, as economists, it goes through enterprise first, then users.
Yes, I think the retail users are going to form an important base of people who use it in high velocity, but I think the enterprises are key to distribution.
So it's more for you, the enterprise, are more the influence to follow than bank like BlackRock or
Yes, because enterprises, the role that they play in the economy is very simple. They provide goods and services, right? And that's the basis of transactions, right? We want food, we go to an enterprise who provides food, right? We want a service done, right? For example, smart contract audits, right? And that's the only reason we have a desire to trigger that payment. So I think enterprises are key to that value chain, and therefore they are key to payments as well.
That's a good point. Thanks. Pascal, please.
So yeah, back in the days, I think for me the turning point for stablecoins was actually Curve and the liquidity mining, because before that we had two stablecoins on Ethereum. I mean, decentralized one. We had the DAI and the SUSD, and both experienced very bad peg. And then the liquidity mining arrived, the triple arrived, pairing DAI with USDC and USDT. And this was really the turning point where we actually can really use stablecoins on-chain with deep liquidity and with a peg that is actually maintained. So yeah, I think this for me was the turning point.
Before that, you had no guidance, like no real stablecoin to follow, basically.
Yeah, you could use it, but yeah, DAI, if you remember, was fluctuating a lot. SUSD also, I don't remember how low it went, but yeah, the moment we had Curve and the liquidity mining, it totally changed something.
Yeah.
Well, the only thing I could add, I think, from the point of view of our activity was that in the early days, you only had one way to access all of those things, which was through centralized exchanges, which were, a single point of failure. I mean, as we can see today, they were centralized. They were most of them not regulated. We saw many stories of how it went. So the whole challenge was that to build an alternative that was good enough and more aligned with, why are we using crypto in the first place is to be in self-custody.
That lead me to my second question is, in the realm of different business, models and stablecoins, like what key factors should business or individual consider when choosing one? Like there's a lot of them. There's a lot more coming. What will be the factors that individual or enterprise will be like, okay, we're going to use this one? Yeah, sure. You can start.
Again, I think since yesterday we have talked a lot about all the different kinds of stablecoins, all the different kind of mechanisms, how they work, why they work this way. So they answer different needs and different user segments will be attracted by different value proposition. Some people will be attracted by the fact that it's properly regulated. Some of them will be attracted by the fact that it's really permissionless and truly censorship resistant, etc.
Okay, Pascal.
Yeah, first it depends who you are and what you need the stablecoin for. Of course, there are many stablecoins, and we always say, "Oh, why do we need so many stablecoins? It fragments the space and so on," which is true for some use cases like liquidity. For most of us DeFi users, yeah, it's a bit annoying. But then if you look beyond this issue, you actually see that some stablecoins, they have a specific use case. Maybe Twitter is a bit an echo chamber, so we only know the stablecoins that everybody knows. But for example, I met a few guys in Switzerland. They have their own stablecoin. No one knows about it, but it has one use case and it does it perfectly. So it's, for example, to help farmers in Nigeria to receive financing from the US. So it's very hard for investors in the US to actually finance people in Nigeria. So what they did, they are tokenizing dollar. So they send the stablecoin to Nigeria. In Nigeria, they have banking partners which accept those stablecoins as collateral to give loans to farmers. Then the farmers do what they have to do. They reimburse the banks. The yield comes from them, and then the stablecoins are sent back to the US.
So it's adding value. Like that's so for you, like the stablecoin itself should add more value to e-money or just regular cash.
Yeah, stablecoins should. I mean, there are different stablecoins again, but yeah, when you choose one, you have to see, okay, what can I do with it, and what do I need that maybe a bank can't do, or what a stablecoin can do better, and so on.
Got it.
So I think from an enterprise perspective, it's two things, right? One, it's stability. They need to know that their net asset value of their treasury isn't going to dip by 30% overnight. So that's important. And then the other is liquidity, right? How easily can you move in and out of different currency pairs, and how easily can you move in and out of cash? Because at the end of the day, at least for enterprises, they have to interact a lot with the physical world. And so the ability to cash out is really important for them, which is why you have services like Mount Peleron, which are critical.
All right.
Yeah, and I think I agree with all of these points. You know, I think liquidity and ease of cashing in and out are definitely probably for consumers the things that are the most important. But I also think the unit of account is interesting. You know, I think we have a lot of stable coins that are pegged to the US dollar or to the euro, and we don't have that many pegged to all of the different global currencies. And I'm excited for that to change because I think for many people, people like to think in their own local unit of account. And that doesn't mean that they won't want to hedge inflation with access to these other stable coins, and the fact that they're all on dexes accessible to everyone, I think is really exciting. But I think it's still nice, especially as people kind of cash in and out, to have the opportunity to kind of have a stable coin that's in the unit of account that they know. And then if you extend that a little bit further, you know, there's this concept of community currencies that have been around for a while, which are currencies that tend to be pegged to some index important for a kind of local community, and that you know, tend to circulate in those communities, and so using them incentivizes effectively reinvestment in your local community. These have been around with kind of paper versions for a long time. I think Sardex is probably the biggest one in Sardinia, but there's also ones like Ithaca Dollar that's been pretty big, Berkshire's, and many others. And you know, increasingly people are bringing these on chain, and I think it's going to be pretty cool to see a world where, you know, every community might have a community currency that is kind of reinvesting in that local economy.
So I'm going to take you up on that, actually, Pascal. You say that there's a stable coin that has been used only for one situation in Nigeria. How does this align with the regulatory, like this? You know, because it's a big main situation, right? Every time you hear stable coin, people think about the regulator. Like, how does this fly with you know, with people, politics? And so what would you say about, like, share some light on the best practice of creating a stable coin that just, you know, goes with the regulatory situation?
So first, regulation is here for two things. It's to protect investors and to prevent fraud and money laundering. So I trust that we can all do a good job to build systems which are respectful of those regulations. But yeah, for the case of the Nigeria, it can be seen also of a way to send, you know, dirty money or whatever to Nigeria, and it could seem like there is not a lot of control because yeah, you don't go through a bank, so actually you can send whatever you want there, and the money you get from Nigeria also is maybe not clean. But again, we don't have to see the evil everywhere. Of course, yeah, regulation is here for preventing those bad things to happen, but sometimes, unfortunately, it breaks a bit the innovation. I mean, it slows down the innovation and so on. So I think we have to have a proactive discussions with regulators and to show them, look, on the blockchain you can see everything, we can help with the traceability of the funds, just don't kill what we are doing in the name of protecting investors or to don't fund terrorists or this kind of thing. And we all know here that cash is actually, you know, way more damaging than.
No, absolutely. And it takes, I think, that's my personal point of view, regulatory and compliance both have to go a long way with technology because we're always evolving. Like, you know, like you said earlier, cash been evolving for centuries. So, you know, having compliance and regulatory puts just base of security should be along with like we're evolving. But I would say emerging countries are where there's a lot of use of stablecoins. And the West use stablecoin to protect themselves in DeFi space, but emerging countries use them to live. basically. You know, what you say about Nigeria, I've been in Asia for a very long time, in Vietnam, as I told you, and there was real use case. But it doesn't really get along when the regulatory come, because they're like, yo, you guys made money, they didn't pay taxes. Well, like, you know, how can we evolve on a situation where stable coins should help, but still, you know, show white hand of like, yeah, we're doing this because you are not ready for us, because that's the problem with infrastructure nowadays. How, like I would say this, like for CETO, for example, you guys, a lot of emerging countries, do you go to the regulator first, or you go to the use cases and people who need you first?
Yeah, it's a great question. It's a little bit of both. I think, you know, one of the, like on the AML front, one of the most regulated, I guess, aspects of the whole value chain are on and off ramps. That's where, you know, in order to operate an on and off ramp, you tend to need to have various different licenses depending on which country you're in. And I think that it has left us in an interesting world where we have a lot of fragmentation right now, right? So if you want to cash in and out in country A versus country B, chances are you're going to have to do that with a different on and off ramp provider, because each on and off ramp provider, you know, has, because I guess this need for these licenses is creating kind of a lot of global fragmentation. And I think that's an interesting challenge, because I think it makes it much harder for dApp developers, for wallet developers to build really seamless applications. And so one thing that we've done to try to make that easier is to launch Fiat Connect, which is an open API standard for on and off ramps. So you can think of this as kind of the wallet connect of the on and off ramp world. So the idea is, rather than, you know, as a wallet, as a dApp, rather than integrating all of these different on-ramps and off-ramps in every country in the world, potentially hundreds of on and off-ramps, you just integrate one API standard and then connect to each of these as they pop up with Fiat Connect support. And that's been going pretty well. We launched the standard last year, and now there's already 12 markets that have launched through a number of different providers. They're all licensed and have and are doing full compliance, KYC, everything. They're servicing now just under 2 billion customers in terms of the addressable market. And so it's pretty exciting to see. And that's only going to keep growing. And so, you know, you mentioned Nigeria, and I think Togo was mentioned before. If you go to these markets, you can now cash out with Fiat Connect. And there's some really great wallets that have implemented this. And Fiat Connect is a backend API. And so the wallets actually present an experience that looks native to the application. And so for the user, it's just very seamless and very easy. And this can be reused by, you know, any wallet out there that wants to support the standard. So yeah, I think that's the part that we're doing the most to really simplify navigating this, I would say, pretty fragmented regulatory space.
Okay. What about Request Finance?
So I guess at Request Finance, we don't operate at the wallet level or the interface between fiat and crypto. But I think a lot of people don't realize that there's a lot of regulations around financial reporting, right? So for example, starting 1st of January 2024, all US persons, including businesses, have to report transactions, including crypto, 10K and above within a 15-day period. And you have to keep records of the name, the purpose of the transfer, their address, and all these things, right? That's not possible with EtherScan, right? And so I think one of the reasons why we exist is to help enterprises at least have a handle on the financial reporting, and you've got to keep this records for like 5 years or something like that. Yeah, and so we try to provide a UX that is very familiar for regulators, or that are built around these regulations that were built in a Web 2 era. So people are identified not just by their wallets, but we correlate it to their addresses, their emails, their legal names. And that makes it easy for businesses to actually adopt crypto, because now they can comply with these regulations where it might have been very difficult to do or impossible with things like block explorers.
What about Mperm? You guys been regulated from day one. So how did you guys actually onboard the whole regulation? You just started by that, or like you know, how did it come to you that this was the business model that you guys should have go to, regulation rather?
We have always worked in a regulation first way, is that for what we do, if you don't start by that, you cannot do it. So that's also what allowed us to grow, because we've been very diligent, I would say, from day one. And since we are based in Switzerland, and Swiss regulation is quite famous in other countries for being actually quite strict.
You guys are very strict, yeah.
Yeah, and that way to work is actually highly recognized in other countries, and that allows us to grow in other territories with quite smoothly, actually.
So how many countries you guys are operating in right now?
So Switzerland, the EU, UK, and now we are working on some in South American countries.
Okay. Got it. So
and the US too.
US too. So you allow people to actually have multiple bank accounts in every country, or it's more?
We don't do bank accounts. It's really on and off ramp. But what we are working on is to actually attach bank account coordinates to a wallet. So it's not a bank account, it's a wallet, but with bank coordinates that can allow it to work with the bank system. So you can receive fiat on your wallet, you can send crypto from your wallet and pay in fiat other people. And that's what we are trying to develop in here in Europe, and then in the future in other territories.
Okay. One thing that I would say, as you know, as we move, I feel like in every platform, because you guys, like creators and you have platforms, like I feel like UX UI is like the main subject on how easy it is to use either a protocol or dApp, because it can get very complicated, especially if that's not your world. Like, you see all those error and you don't know where to go. And how do you guys value UX UI in your projects?
Yeah, so I think, as I mentioned in the beginning, this is really the reason why we launched Cello, or we built Cello in the first place, is we wanted to make it really easy for people to send payments using crypto rails. And so I already talked about the ability to pay for gas with tokens, but the other thing that we've done that I'm really proud of is Social Connect, which is a kind of a public good that lets you effectively connect your phone number to a wallet address in a privacy-preserving way. And that's really nice, because it allows you to kind of tap into what I like to think of as the biggest social network in the world, which is the amalgamation of everyone's contact lists in their phones, in their pocket. And it's just so much easier to send a payment to someone in your contact list by looking for their name than to have to copy-paste a public key-derived address. And so that's something that I think, at least in the consumer space, has been really, really wonderful. It's really enabled all sorts of use cases now on Cello, where people are using Cello wallets to just to do P2P transactions and to pay for goods. And the other thing that I'm really excited about is actually
you brought the card.
Yeah, and so this is started by a company called Card. It's a Swiss company, and I think I can see the founder in the back with a big grin on his face. And so if you want to learn more about this, definitely go chat with Victor up ahead. But this is really cool. This is a self-custodial wallet that has a private key inside the chip. And it supports NFC, and you can effectively tap to pay on Android POS devices with this, where the transaction gets signed up, gets beamed up to the card using NFC. The chip signs it and then beams it back down.
And so how fast is it?
It's like the same speed as like paying with Visa. It's pretty incredible.
Okay, marketing is on right now. I see. Okay, got it.
Yeah.
Got it. I noted. No problem.
And it's, just on the topic of UX, like, we're all used to tapping to pay now with credit cards and with our phones and with our watches. And now that same ergonomics, that same experience is available to crypto rails. And so it's pretty cool.
Cool. What about you guys?
Yeah, I get kind of triggered whenever I see comments on Twitter saying that, oh, UX is not important to DeFi, like infra is important.
Yeah, that'd be crazy to say that.
Yeah, well, you'd be surprised.
That's why I don't stay in Twitter. It's toxic. Get out of it, bro. Get out of it.
So UX for us is really front and center. So for many of the same reasons that it is for P2P as well, like Marek said, but especially at the enterprise level, a lot of your CFOs or your HR personnel, they don't come from Web3. because you don't hire specifically for Web3 credentials, right? You hire someone from KPMG, from EY, or with a strong finance background. These people are used to using tools that look and feel like banking apps or ERP systems, right? That they're used to in traditional companies. And there's good reason why you want to focus on UX, because it's not just an operational issue, there's also a security issue. So one of the benefits of using request finance to process payroll, because a lot of people say, oh, why don't I just use a token multi-sender like Disperse? In request finance, you don't pay to a wallet address, you don't copy and paste that. You just select the people by their names or basically by the groups that you assign them inside the app, right? Like employees or contractors. And then you batch pay the invoices that way. We saw this happen on March the 6th, I believe, where the DAO that tried to buy the constitution, they processed the payroll via a Google Sheet, like most companies do, right? They have wallet addresses, the amounts, but guess what? Somebody got a hold of that Google Sheet, added themselves to it, right, and said, I think I'm going to pay myself 75 ETH, right? And then he hid the row in the Excel sheet, and it gets downloaded, sent to the Gnosis Safe multisig, and 6 signers looked at that. 6 out of 9 signers looked at it and like, looks good to me. And they realized they're out of 120K for that month, right?
That hurts.
Yeah, so I think UX is really more than just a nice to have. It's critical in many ways. Not just for adoption, especially at the retail level, because it can't be worse than Web2 fintech apps. But at the enterprise level, it's absolutely crucial for security as well.
Yeah, I think we all agree that user experience is the most important. But as our side, we are a protocol. We don't focus on user experience. Of course, we build stuff, so our stablecoins are actually also gasless. I mean, you can pay using relayers, you can pay the fees using stablecoins itself. But for me, it comes down to the work of our project to work on the UX. Argent, Avocado Wallet, those are actually the guys who will help companies to be onboarded, users to be onboarded. So it's their job actually to do all the abstraction, network abstraction, gas abstraction, protocol abstraction, even stablecoin abstractions. We have so many stablecoins, I said before. Each stablecoin has a specific use case. On our side, for example, we work with different stablecoins, and we combine their strength with our strength in order to provide users with crazy use cases. Like, for example, there is a stablecoin called Euro E from Monerium. And the cool thing is that it connects an IBAN, which is at your name, to your 0x address. So whenever you send euros, you actually do not receive euros. You receive Euro E directly on your wallet. Okay. And us, we focus with our JEuro on the liquidity, for example, or the yield. So we combine the euro of Monerium with our euros, and somehow seamlessly, I mean, you have to do many transactions, you can go from your euro account to any token that you want on the blockchain. And then it has to be the work of Argent and Avocado to do all the abstractions and to just say, okay, you send euros, you have euro on chain. It's actually a basket of euros. It could be any kind of euro which is on chain, which is in this basket. And then you can use it the way you want. So yeah, my point is the protocol shouldn't work on the user experience. We should focus on our things, and then app layers and so on should do the. Yeah,
but that's still a user experience somehow. And from what you just said, it kind of, lead me to a next question. I'm gonna let you answer, but like, is there a way because we have so many stablecoins, it's so fragmented. Like, is there a way to create like an interoperability between all those stablecoins, knowing that they be pegged to same currency? And that's one of the big questions that I want to ask for you guys that that live in the space. Would it be actually either like a use case or just a subject where we could create interoperability between all those stable coins, where you can either have them all together for payment, or like how could this work in this space where you have so many stable coins and more coming?
Yeah, it's an interesting question. I mean, it's certainly possible to have a new stablecoin that's just backed by a whole bunch of different stablecoins, and in so doing, you're decreasing the absolute loss that you might cost yourself if one of these depegs, but you're also increasing the likelihood that you might lose some money, because if you spread out your risk across a whole bunch of these, maybe it's more likely that one of them will fail. So I think it's a possible. It's an interesting question. I wonder if people would actually want to use those or not.
Because you never know. When you create sorry to cut you off, but like when you create something, it's more the user that lets you know what your app's gonna do for you. They're not you guys as builders already felt that. You create something and then it's being used in a way that you like, I didn't think people would use it for that. And next thing you know, they use it for an entire new business model that you didn't even see coming. So that's why, I'm asking the question, because there's, we're talking about emerging countries, but one thing about emerging countries, Vietnam, for example, has multiple coins and stable coins that they use, and they find themselves paying you in 6-7 different tokens, and you're like, wait, like, how can we just aggregate all these? So I'm wondering the question about stable coin itself, like how could this work?
Yeah, I suspect that ultimately the market will kind of help wean that down, because I think it's maybe not necessarily a technological, I guess, problem. It's more of a network effect problem. And I think it's fine if people use a lot. I think we talked about reasons why people may want to pick one stablecoin over another. There's many reasons, and I think the number of stablecoins that will be available for folks that give them different value props is only going to grow. I think with crypto, you can actually innovate. You can do things that you couldn't do that easily with fiat. You can create stable coins that are backed in part by natural capital, right? And if you care about fighting climate change, you might want to use one of these stable coins. I think I see Glow over here. You can have a stable coin that uses that's fiat backed, but then uses its interest to support public goods or to support good social causes. Maybe you would rather use that stablecoin than to have those funds just go into someone's pocket as profit. So I think ultimately the market will decide, and it's cool to see that there's all of these possible innovations now that are popping up, and they're, I think, only possible because crypto just makes it so much easier to experiment.
Yeah, I think that's the exact approach that we take, at least at the app level. We give people like freedom to choose whatever stablecoin they want, and also on whatever chain they want, right? So of the $350 million that we've processed, 60% is in stablecoins. About 30% of that is 31% is USDC. Another 12% is USDT. 11.8% is DAI. And then like 3% is like CELO USD and a bunch of other like Singapore dollar stablecoins and things like that. So I think at the app level, we don't really try to push people to one stablecoin or another. We just let them duke it out, right? I mean, like and
give them the choice.
That's right. You're right. The goal for us is at least to just support as many use cases as possible and abstract away some of the complexities of using stablecoins. And may the best stablecoin win.
It's a good one. What about you?
Yeah, abstraction is the key, but for a basket of stablecoins, it depends again to who we speak about. Like us as DeFi user, when we hear about a basket of stablecoins, it's most likely to do new crazy yield farming strategy with stablecoins that earn yield and so on. But if you check some applications, for example, WireX, when you hold euro on WireX, they tell you it's not euro. It's actually euro stablecoin. So they do already the euro abstraction. And what I would like maybe in the future to see on a request is they want to send euro to someone, and this person, you say, okay, I want to send euro on chain, and they don't know which euro stablecoins or whatever, however it is settled, and then it will be sent. So a basket of currency can be very useful for applications directly, app layer, and for DeFi user, yeah, it's just for generating yield and have fun with experiments. So again, it depends about who we speak about.
Right. What about you?
Being client-facing, I mean, we serve end users who buy and cash out those stablecoins. Or our job is to help them do that with the stablecoins they want. So, like you said, it's the market that decides. It's market-driven, and it's driven by use cases, by yield opportunities, and that can change actually quite fast. But our goal is just to support as many as we can, as long as it's liquid enough to offer a good quality service. If it's on multiple chains, and we can easily bridge them to move liquidity for the clients, then we do it.
All right, I see. I want to go back to the history of money and the digital money that we have. Right now, obviously, one big fact is CBDC emerging, and we already talked about this. But the real question is like stablecoins being, mostly security for users, and CBDC, on the other hand, from governments see themselves also as CBDC. How do you see, how do you foresee, the interplay between stablecoin and CBDCs, and can they either coexist? Can they, how might they complement each other?
Yeah, I suspect that a lot of this innovation, a lot of this experimentation that's happening on public chains is probably not going to happen on these CBDC chains, for good reason. And so the way I see both of these two worlds interacting is basically having these CBDC chains be on and off ramps for the masses. So I think it's exciting. I think it's going to be really interesting to see how it evolves. But my suspicion is that people will build bridges, and these things will become just really good on and off ramps available for everyone.
Yeah, 100%. I think it's good to remember that CBDCs are born as a response to stablecoins, right? So I see the relationship between stablecoins, private stablecoins, and CBDCs in a competitive lens. I think it's cool to know that for the first time in human history, there has been a credible alternative to the financial system. And I mean, for the first time ever, that is not controlled by the central banks, right? So I think that's quite interesting to see how they'll duke it out, honestly, because I think it is a competitive landscape. As the stablecoin ecosystem evolves, as DeFi evolves, the governments will have to say, do we have a credible alternative, or do we not have a credible alternative, right? At least where I come from in Singapore, we are trying to be very active in taking the lead, at least our central bank, in promoting CBDC projects and kind of thinking about different CBDC designs. But for ourselves, we've concluded that we don't actually need it because our domestic payment rails are sufficiently. So we've got real-time payment systems, just like UPI in Brazil or UPI in India or Pix in Brazil. And so there's no need for a CBDC. And yeah, so I think it really comes down to competition. At least in Singapore's case, it seems to be that stablecoins have pretty much outcompeted CBDCs.
So for you, there's no use case for CBDCs?
I think it's going to be very limited. I think it might probably be not at the retail level. It probably would be in terms of real-time gross settlement between central banks, or between large institutional banks. So for example, if you've got different banks in different countries, they might want to have some sort of an internal clearing mechanism that settles instantly instead of having these outstanding balances on the ledger. So I think that's where probably CBDCs will make the most sense. I don't see it really having much of a value in the retail application.
Because as today, there's two countries that released their CBDCs and actually working on it, China and Nigeria, with two different politics. I'm not going to get into that, but the people answer to this very differently. One don't have no choice. I mean, it is what it is. I'm not trying to get into politics, but and the other one is against it. Period. Still trying to use stablecoin and have the government of Nigeria thinking about using a stablecoin. So moving from, you said CBDC is an answer to stablecoins, and now you have the population in Nigeria, for example, saying that, well, maybe it's better to use a stablecoin. So it's, like a revert situation of what they expected.
So I think in countries where the payment system and the payment rails or the banking rails are just generally more broken, you might see CBDCs as a great way to leapfrog whatever Web 2 developments there are with payment rails, right? So that's possible, I think, especially in emerging economies. But in sort of middle income countries, so Singapore, right, we went from having basically checks and credit cards to digital payments that are instant. So in those cases, I don't think you'll see a use case in it. And again, I think CBDCs aren't just competing with stablecoins; they're also competing with real-time payment systems, right?
In terms of what? In terms of tracking? In terms of
traction and in terms of the use case, right? At least in Singapore's case, we not only have a real-time payment system domestically where I can pay to anyone's phone number instantly, up to $10,000 or something like that. But we've also made efforts to link our real-time payment system with other countries. So I can use my domestic real-time payment system to pay someone in Thailand or pay someone in Malaysia via their phone number. It's instant, it's free, or 2 bips or something like that. So I think that's what CBDCs are up against as well, not just private innovations, but also, in fact, banking innovations, right?
And that's as a world adoption is already live. This is what people already do.
Yeah, I can do it right now, yeah.
Okay, well, if you want to send 10,000, just try. It's all good.
Yes, yeah.
What do you think, John?
But again, right, I think stablecoins have the benefit of being like, okay, maybe as a Singaporean, I can access those payment rails for other countries, but they can't do it with each other. So it's a hub and spoke, right? Singapore's
Okay, I
right,
see.
but someone in Thailand can't do the same to someone in Malaysia, right?
So they use Singapore as a hub to.
No, you can't unless you have a Singapore bank account, right?
Okay,
but if
got
you
it.
have a stable coin, it does matter, right? So
Yeah,
that's
yes.
why I see it is a competitive landscape. Stable coins are just one form of financial technology that are competing with banking innovations, that are competing with CBDCs. So I think CBDCs have their work cut out for them if they want to offer something that's truly going to be valuable.
Okay.
The other thing that I think probably doesn't work is you probably can't send it to a phone number that doesn't have an account yet.
That's right.
And I think that's something that with crypto we can actually build, right? And something that Social Connect supports. You can send money to a phone number even before the recipient has created a wallet. It just sits in the smart contract in escrow waiting for that person to sign up. And I think these kinds of use cases actually allow us to perhaps even create better experiences in what you're discussing, which honestly sounds pretty amazing. Like, I want to move back to Singapore. I grew up there and I want to move back already.
And I think it's something important to point out about DeFi is that I think that it will enable us to do what open banking promised but never delivered, right? So I think it's impossible, like wherever you live
It's a
right
headshot.
now. Yeah, like you cannot connect your bank account, right, to trade on the Singapore Stock Exchange. I guarantee you, right? But that's ridiculous in DeFi, right? We just connect wallet and begin trading. So I think you will have a more open financial system with DeFi, especially as real-world assets or traditional asset classes like fixed income, your securities like equities and stuff like that become tokenized. You're going to get more efficient capital markets, I suspect, right? And you can put ways of like gating it by citizenship and things like that. But it's inherently, I think, a superior design for more efficient capital markets, where someone like think about what it takes to buy U.S. Treasury bills for somebody in Vietnam. You have to have a depository account with the institution. You have to open a brokerage account who happens to have a brokerage account in the US. Or if you want to go treasurydirect.gov and fill out a 16-page form, right? It's three clicks, right? On like Ondo Finance or Maple, right?
Well,
yeah.
thank you. We actually run out of time. Thanks for all the insights and the knowledge you guys share. I don't know if you have time for like a couple questions from the audience. Great. So if anyone got questions for our panelists, I'll be right now.
Just raise your hand if you do.
Yeah, you just have to raise your hand. This one.
Hi, thanks for the talk. You mentioned a fragmented regulatory landscape. If there was one country or one regulatory body that's pioneering this space, which one would you pick?
It's a tough one.
In what way? You mean like, would you just want to serve customers in that country, or and forget about the rest of the world, or yeah, in what way?
I think in a way as maybe a company like Montpellier to settle there and have some leeway with the local regulatory bodies.
Yeah, so obviously I'm going to preach for my own church, but in Switzerland I think it's great for that because you have legal certainty on how crypto, stablecoins, or all the crypto assets are treated as a business. Like if you're a crypto company, you want to deal with that, and on a fiscal point of view, where you have you know how it's treated and it's treated reasonably. And finally, the banking environment is quite okay, friendly-ish in Switzerland. So I think the combination of all those things is quite good to choose as a regulation. And as I said earlier, the KYC ML standards of Switzerland have been, became really, really strong and are really recognized internationally. So if you offer financial services in Switzerland, you are under that regulation. All over the world, you will be recognized for this, and you will be able to find partners who say, okay, you apply Swiss directives. We know their quality. We know they are above our own standards, so we can, accept them easily.
All right, thanks.
Yeah, I think that the same would be for me. Like I would preach Singapore, right? But the reason is kind of simple. I think the approach, for many of the same reasons that Switzerland is so attractive as well, right? Because we've got a strong financial hub, but also because we looked at the regulation and that was drafted for traditional securities and be like, oh well, we'll just apply it to crypto, right? And here are all the use cases. And the central bank's been proactive in literally saying, like, okay, like this is the securities regulation. Is it a security? there's no question about it, right? Same thing with payments and stuff like that, right? So it's less complicated, and for businesses especially, if you are worried about a regulator who's going to sue you to find out, right? Yeah.
Yep, thanks.
Any more questions? No, looks like that's it. We'll round of applause for our panelists. Thank you very much, guys.
And thank you for moderating.
Say that again?
Thank you.
Thank you for moderating.
No problem.